And we are live. I believe we are. This is Travis from EAR Live. This is our second episode that we're going to end up doing. I have 928. Let's go ahead and go through the disclaimer, and then after that, we'll get into everything else. Just want to make sure that everyone can be able to see me live. We're not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind, and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, just want to make sure that people can actually be able to see me. I'm taking a look at the stream and seeing if it's actually clicking on. Okay, I'm going to go with, I believe that we are good to go. I just want to confirm one more time. I'm just going to take a look at my content. Okay, so I believe that we are on live. If y'all hear echo, please forgive me. Let's see. Okay, we're good to go. All right, so let's go ahead and take a look at it. It is 9:30. That means that obviously we're looking at indexes and everything else open up today. As we end up going through, it's really not going to end up being much that we have to pay attention to for the whole bunch of news today. It's going to end up being technically a trader's day. And what I mean by trader's day is you end up taking a look at it. You don't see that much high impact news as we end up going through. We have Governor Bailey that's going to end up speaking a little bit later on today. Don't know what his speech is going to end up being on. Typically, when you end up going to FX Street, it doesn't necessarily give you too much information, but we do know that this is a regular type of meeting, so it may end up affecting it a lot or may not, but ultimately, taking a look at the charts are going to be the most important thing as we end up going through and taking a look at them. So what I end up doing is that I like to be able to take a look at three main pairs. First, I end up taking a look at the United States dollar index. I end up taking a look at oil. I take a look at gold. The reason why I take a look at those is because they have huge correlations to United States dollar. Being able to take a look at what's going on with oil and the Canadian dollar, and then after that, being able to go through and see what's happening with the Japanese yen. And ultimately, I know a lot of people like to be able to trade gold. And because this is a website that ends up looking at and studying some of the best expert advisors, we are going to end up peeping and going through and taking a look at some of the expert advisors that we have been testing, have been running, and being able to take a look at those. Currently right now, I am running in my setup the Holeshot MT5. I'm taking a look at up, I'm trading down, and at that point with this trading this manually from there as well as we end up going through with that. If you're interested in being able to learn about those, what I end up doing is I place this inside of the chat box to where you can be able to try it out for yourself, be able to take a look at it, and then be able to go from there if you're interested. If not, no worries as we end up going through, but those are the systems that we are trading and going through from there. All right, so United States dollar, we're going to take a look at it from a weekly, then a daily, and then after that, make a decision on what's going to end up happening with the overall pair. From a weekly position last week, market ended up overall pushing bullish. This market has went through a counter trend line break and started to be able to push up to the upside. If we look at the stochastic is a little bit overbought as we end up taking a look at this. But currently, the market is still in that range of movement to where if the market breaks out of this area, the D extension is going to end up being at 13,827 for the overall break to the upside. Now, this market has shown that 12,990 has been a little bit of a resistance that has been struggled to be able to beat. Currently right now, as we end up taking a look at it, I'm seeing a little bit of a wedge that's happening right now. I don't know if we're describing this based off of what happened through the weekend or just taking a look at what's happening currently right now and seeing that there's not really no overall movement. But if we take a look at this and go into the 2 hour, I'm going to end up showing what that wedge actually kind of looks like. It may not necessarily be defined as a wedge all the way through. I remember we ended up taking a trade off of this one last week, said that we wanted to be able to get in. Based off of the counter trend line break, the thought process was to be able to take profit at 13,130, and then after that, take profit take your short profit if you end up hitting it, which would have been right here at the breakout point, which was at 13,032. But as we go through and take a look at this, currently this is somewhat of the wedge that I'm talking about right here. From a daily perspective, you can see it a little bit better, but it's a pseudo wedge as we end up taking a look at it and kind of being able to see how this market kind of goes. So if you haven't, if you end up getting in on, I believe that was Thursday that we end up taking a look at this one, and you're still in at this particular point, I would say be patient. Obviously, we have a low risk compared to our reward. For the people that have not got in, or the people that are looking at being able to get in currently right now, it's not necessarily a good spot to be able to get into it. We're in the middle of a triangle and it has not hit the resistance nor the support at this particular point. So if you're looking at being able to buy, you'll want the market to be able to fall down at least to support again right here and be able to get you into a spot to where you can be able to get better value. Or what you can be able to do is wait for the market to be able to truly break out. And typically when there's a breakout, there will end up being a retest that you can be able to get back into and be able to push up from there. So United States dollar currently right now, what you'll look at on smaller pairs is probably consolidation between all of the pairs. So that means to me, we're probably not going to end up having a lot of great opportunities at the beginning of the morning to be able to go from there. Taking a look at what's happening with oil. We take a look at oil from a weekly perspective and start out from there. The market has been in a strong consolidation wedge from 94, which is the resistance, and the support has hit a couple times, but the lowest portion of the support was at $64 a barrel. Currently, right now, the market is at 76.47. So we're basically back in the middle of this consolidation as we take a look at it. From a looking at it and saying, okay, what's the direction of the market? We can see that the market is currently, I would say, short-term bullish, but it is still in consolidation. For people that are not necessarily, if you want to look for a clean chart to be able to get into and just kind of work that clean chart, this is not necessarily the most cleanest of charts to be able to get in. Because quite frankly, the question would be, what is the direction? You could say from a weekly perspective, we've had about 7 or 8 weeks of overall bullish movement. But if you end up going to the daily perspective, we'll probably see that this market is still kind of consolidating, trying to figure out what's happening. But let's say if we're looking at this from a bullish perspective, in which obviously long-term the market has been bearish. If you're looking at this from a bullish perspective, I still don't like what I see. I'm gonna wait on this one. I'm not gonna jump in on oil. I'm not gonna look at anything right now. Currently, I'm just gonna wait it out. We'll see how everything kind of moves from there. Oil, looking at the daily, looking at the weekly. The weekly is showing short-term bullish. The daily is still in consolidation. There's really no movement to be able to pay attention to off of that one. Let's go ahead and move on to something else. Let's take a look at gold. Gold was in a large wedge off the daily. Currently, right now, it ended up hitting support. We talked about the market ends up hitting support. That will be an area where you can look at being able to get in from a bullish perspective. From a weekly perspective, we can see that the market has had a resistance of 2060 and a support of 2010. Take a look at it from a daily perspective. You can see that the market has pushed currently down to 2015. We've had 5 days of overall bearish movement to the downside. We talked about being able to take 2 trades. Trade 1 ended up hitting last week, where we end up having this push up to the halfway point when the market ended up breaking out of this the first time. Ended up hitting 2060, but currently from there the market has retraced all the way back down. Currently at this particular point, I would say take a look at the 2 hour or take a look at the 1 hour, see how the market's going to end up reacting. I would not necessarily look at just being able to say, because the market is hitting a support of 2015, that I'm just going to jump in and buy. But I would say that this has been a support that has been proven for a little bit over the course of the last since January, if we end up taking a look at it from this movement. So I'm going to make this a little bit. Let's see if I can edit this real quick. I want to see the rebound and how the market's going to end up reacting right there. I would not make a move until the market ends up making a reaction right there at that particular point. And then after that, kind of be able to make a decision on what's going to end up happening. So gold, we can see that the United States dollar has had a little bit of strength going down from this movement. Last week when we end up taking a look at this, last week when we end up taking a look at this, we got in right when the market ended up making this movement right here, hit take profit 1. Currently right now we're flush and we're just trying to look for a position to be able to get into. I don't necessarily see it at this particular point. So we'll wait on that. Let's take a look at Bitcoin. We're going to end up taking a look at this through Trading View. and we'll take a look at it through Binance and see what's happening with the market from there. Bitcoin has had a amazing move to the upside since October of this year, and being able to take a look at that movement. Currently, right now, as we speak, talked about this market being in a push zone after end up breaking out of 38,850. 38,850 was the last zone before you can end up having a little bit of a push up to the upside. Currently, right now, if we take a look at it, the market has broken out and retested in this area with odds of being able to get up to 65,000 for its overall movement, for its long-term movement. So I'm going to show this, and I'm going to start putting up Fibonacci's to be able to kind of give a little bit more of an understanding about what's happening off of that. I'm going to do it off of Smart Trader as well, so everybody can kind of get a better understanding. Here we go. We're going to take a look at this off of fractal low. And if you're interested in Smart Trader, I'm going to place this in. The one thing that I like about Smart Trader more than anything else, there we go, to place that inside of there. Let's see. Just want to make sure we're good. The best thing about being able to take a look at Smart Trader is that even with the free version, it has something called Smart Fibs. If you end up clicking on Smart Fibs, you can go down to the pivots or the fractals of these overall positions. Then after that, if you click on the fractal low, just click on the bottom of it, it will end up giving you the Fibonacci. It end up giving you the Fibonacci's of what a market actually is. So if you look at it, this market has went through 1, 2, 3 Fibonacci's and has finished off all of those moves. If you're not familiar with Fibonacci, it's basically an ABCD pattern, being able to understand how the market ends up pushing and then after that retracing within that overall zone. So if we take a look at this, and I'm going to be very brief on how I teach this, but we had a strategy session and a strategy video that we ended up going out with last week. I do expect to be able to have another strategy video out later on this week that you can be able to take a look at from there. But currently right now, what ended up happening with the market was this. Market ended up starting off at a low. Let's see. Market ended up starting off with a low right here. Here goes your A. Market pushed up to B, which was your, in this case, your overall fractal high. From there, the market ended up retracing. We want to look for a fractal that has 2 candlesticks to the left and 2 candlesticks to the right that are actually above it, which will end up being right here. The market fell all the way down to this red line. So please remember this. If the market ends up retracing to the red, it will end up extending to the red. In this case, that means that Bitcoin would be slated to be able to get up to 51,850 for the overall move to the upside. Now, if we're looking at this, we see consolidation, but we're starting to see a lot more bullish movement at this point as well. Market ended up breaking above the B, and since then it has started to show a little bit of resistance. If it ends up breaking inside of this zone and stays to the upside, we're going to end up seeing a zone 3 trade. A zone 3 trade means that as we go through and take a look at this, if it pushes up bullish, it's going to end up staying bullish, and you're probably going to end up seeing a lot more people be able to jump into it. So if it's above the Fibonacci B, that means that they end up breaking a high. In this case, typically when you end up having a zone 3 trade, the market will retrace back to at least the B one time, and then after that, once it breaks out, it will continue to keep on moving in that area. So if you're a person that's interested in being able to get into Bitcoin or being able to take a look at it for as a tradable opportunity, look for the resistance break off of this. If you get a resistance break from this point, then after that, you have a huge chance of being able to get in and be pretty comfortable with the movement as long as you end up being patient. Some people will look at being able to jump in right here, 48,520. Not necessarily going to end up being one of those people. We see that this was the overall fractal high. If you're being conservative, I will look at being able to jump in at that particular point once the market ends up breaking above and closing above that overall position with a breakout and a retest. So I'm going to make this a little bit bigger. 48,850 will end up being the spot on saying if you did not get in, that would be the spot to be able to get into. For the people that end up missing it, the support was at 47,804. So we didn't necessarily have a move from there, but that will be my initial thought. Some people, if you're looking at being able to jump in, let's say you want to be able to be a little bit more aggressive, I'm going to make this yellow so people can be able to see it. Currently, right now, we end up having another resistance point that has been broken out of already. If you end up having a breakout and then after that, a retest of this position, you could possibly be able to jump in right here. Be able to place your stop loss below the overall swing low. The swing low off of this one is this candlestick right here. And that low was at 47,609. Anything below 47,609 will be a comfortable stop loss. Take profit. You're just going to end up riding it out and kind of see if you can be able to get up to 65 if you end up liking it from that position. So there you go. Bitcoin, looking at being able to buy, not necessarily looking at being able to sell at this particular point. Just looking for a better opportunity to be able to jump in. Once again, not financial advice, but this education, giving you an example of what I will end up doing when it comes down to that. Okay, let's go US 30. The market has been open for about 14 minutes at this particular point. We're going to take a look at it at capital.com. And being able to take a look at this last week, we ended up saying that this market was going to end up pushing up to 38,850, which was the de-extension from this overall movement. I'm going to show it from a daily perspective. And then after that, we'll kind of understand it. But once again, long-term traders, swing traders, if you're interested in being able to learn Fibonacci movements, this is the reason why you end up doing it, because you can be able to get in, be very patient, and be able to get large swings off the market. Market ended up retracing up to, or started off at 28,605, ended up having a fractal high at 38 or 34,930, fell all the way down in March of 23, all the way down to 31,714. Finally ended up having a counter trend line break, and then after that started to push up. Market fell down to the green area. In this case, green goes to green. I need to keep that. Green goes to green. The market has just completed that de-extension, and we can see that the market is starting to slow down a little bit from this overall movement. Now, keep this in mind. Because this movement is over with, I'm not interested in looking at being able to buy at this particular point. I do expect that there's going to end up being a retracement. So if US 30 ends up going down, then that means typically the correlation is that if US 30 ends up going down in price, typically that means that the United States dollar starts to get a little bit stronger. So if we're looking at that comparison between this and the United States dollar index, we can see that there is a little bit of consolidation for this overall movement, but we did expect that there can end up being a breakout to the upside. If we take a look at what's happening with US 30, if US 30 starts to fall and starts to retrace from here, even down to 37,770, we should see a movement to the upside off of this pair, by being able to pop up and then after that be able to go from there. All right, so that's how I'm looking at it. I do expect that we probably might end up seeing a little bit of upside movement from there, just from a tradable perspective at that particular point. Now, for my people that like to be able to trade, reversions and everything else like that, trying to see if there's a move that's out there. We know that this market has just recently completed a fractal, or completed a de-extension. Currently right now, if we're looking at this and we're saying, if we're looking at being able to sell, if we end up having a short position, your field will end up being this. Here goes your fractal high. That's your completer of your de-extension. Here goes your fractal low. Market end up retracing to the green area. Currently right now, it is in consolidation. It's starting to make that same type of wedge that we end up looking at before. Let me rephrase that. If I'm looking at it from here, I see that same type of wedge that we were looking at earlier. Here and here. Finally end up having a breakout to the upside. So that means to me, with just taking a look at this, it's not ready to be traded. And 38,850 is going to end up being tested. The sweet zone on this spot will end up being from 38,765 all the way up to 38,820 as the natural area of if you're trying to get in from a Fibonacci perspective and get value. So the market can be able to get up to here, and then after that start to retrace. I will look at being able to get in. Remember, your resistance points from pricing is going to end up being from this point right here, 38,750. I do expect that 38,750 will probably end up getting somewhat touched. So that will be the area where I'll look at being able to jump in if there's a counter trend line break and a clear momentum break to the opposite direction. So if we end up seeing that, technically, I would like the market to be able to push up some more, have a little bit of resistance, and then after that fall, and then continue to keep on falling from there. If you're looking at being able to sell this to the downside. Please do not jump in please do not jump in right off the bat. You have to be able to get some confirmation if the market's going to end up falling if you're going to do that scalping move. Remember, the weekly D extension, the daily D extension has been hit off of this move, and it ended up happening earlier. It ended up happening on the 9th when it came down to this, last week of this move. For the people that end up looking at that small little scalp that we end up talking about, when we end up saying that all they had to do was just break out of consolidation, which was those yellow lines, if you end up getting that 200 points, then congratulations, you end up making money off of that one as well. But currently, right now, I don't look at this position as something that I would look at being able to jump into currently. But if I am going to look at it, I'm looking at short term. I'm looking at shorts if there is going to end up being confirmation of a fall. Okay, so we'll get off of that one. NAS 100. Take a look at NAS 100. NAS 100. We were looking for a sale as long as the double tops end up holding, and as long as we end up getting a counter trend line break. We did not get one of those things to be able to happen, so we stayed outside of the trade. Currently, right now, the market is pushing up. And we talked about sweet zone areas of being able to find being able to find trades to be able to get into. We take a look at this based off of the daily. The daily currently at this spot is in a R3 zone, which means that we should be looking at bullish movement after they end up breaking out of that consolidation. The market retraced down to the 236, which was right here, which means that it should end off at 18,750 as your long-term D extension. As long as the market keeps on pushing up bullish, then you should see the market move up there. The one thing that I just don't personally like is that we do not have data to our left side, basically telling us if there's a resistance or support that we have to be able to look out for. So with that being said, I'm not interested in being able to jump because I'm not interested in being able to buy new highs. That's just been it's always been a hard line rule for me. I don't like being able to buy new highs just because you just don't know what's going to end up happening with the overall market from there. So I'm gonna sit on the sidelines and kind of see how this market kind of plays out. We'll look at it from a 2-hour perspective. Our short idea did not go through, so we're going to end up erasing that. We had the double tops, seeing that the market could have failed, but it remained to be bullish up top. That's the reason why you don't jump in without having confirmation. And currently right now, remember we talked about the 80-20 rule. We said that the market could be able to, because it did not go below the 38.6 as a retracement. 18,072 is the next area where I think that the market could be able to get up to before it starts to have a little bit of resistance. So anywhere up here will probably end up being a zone where that resistance will end up happening, but I'm not interested in being able to buy up there at this particular point. Nothing makes sense in this one. You look at the stochastic. The stochastic is in the no trade zone. Take a look at the daily. The daily is a little bit over, is in a no trade zone, and the market is overbought, and it's at a new high. If we would have jumped in right at support at 17,663, then it would have been a whole different situation, but we did not. So at this particular point, it's time to be able to wait. We just see how everything kind of plays out at this point. So nothing to do right there. Taking a look at the expert advisors and being able to go from there. Let's see. How can I be able to show this? Everybody, just give me 1 second. If there's any questions, y'all can be able to place it inside of the chat. If you end up watching this late, make sure that you end up dropping in a comment if you have any questions. It's always good to be able to get people's feedback when it comes down to ideas or anything else like that. Okay. So let's try this out real quick. If we end up taking a look at what's happening with the market currently right now, this is the Holeshot MT5. I end up placing in a link to it. This is one of our expert advisors that we end up looking for scalping, swing trading, or hybrid trading. We have it set up to where it can be able to do all three. Essentially, what it ends up doing is that we use a custom channel detector to be able to figure out where the highs and the lows of the overall market is, and being able to catch the overall supports and the buys when it comes down to this movement. Currently, right now, between two of our accounts, we're up 15%. We've only been doing this over the course of the last 7 days and being able to trade this. We traded this last week, right our first day of trading this last week live and being able to have a real account being hosted was on day of non-farm payroll of last week. So you take a look at this. Currently right now, we're up 5% when it comes down to this movement. Get ready to switch this over so y'all can be able to take a look at it from there. Now, as we end up going through, currently right now, like I end up talking about United States dollar pairs, we got consolidation on the Australian yen, we got consolidation on Australian CAD, we have consolidation with Euro United States dollar and consolidation with Pound United States dollar. So at this particular point, they're not going to end up taking any type of trades because there's no movement to be able to get into. So we're just going to end up being patient as we end up doing and just trying to find a overall movement that we can be able to jump into a little bit later on. But currently right now, we just don't have it at this point. Today, as a trader, just talking about how we're going to end up playing this off, if we're going to end up being patient. Currently right now, that's the only thing that we can necessarily do is just be patient off of this movement and be able to find the best pair to be able to get into. With that being said, we have went through all of the pairs that I would be interested in being able to trade at this particular point. Obviously, this is the second time that we've done this, so you're interested in being able to see us do this live again. I like to be able to try to do it right before 9 o'clock or be honest, right before 8:30, so we can be able to trade right when the Forex market opens. But this has been basically your midday of trading, being able to take a look at it. If you like what I end up doing, please make sure that you like, share, and subscribe. And like always, make sure that you end up planning your trade and trade your plan. We'll see you in the next video.